Yahoo Finance continuing its coverage at the very busy Milken Conference in California. Joining us right now is no stranger to Yahoo Finance, Andy Sieg, Citi Head of Wealth. Andy, good to see you. It's been a while.
Hey, it's great to be here. Thank you.
5,000 people at this conference. I think it's up more than compared to 3,000 last year, the team is telling me. A lot of international investors. What have been some of your takeaways? You've been on the ground since day one.
Well, I mean, of course, we got topic one is tariffs and U.S. policy vis-a-vis the rest of the world. It's the beginning and the middle and the end of most conversations, but it's certainly not the only thing that's being talked about here because there are powerful forces that are shaping the markets. There's a lot of time being spent on AI, and I think every business has a strategy, but most businesses haven't, they can't really say they've felt the full effect of AI in their business. I mean, we think about it at Citi. This is going to have profound impact across Citi, and in wealth in particular. It's not going to be very long until we see this be transformational in terms of the way we're delivering advice, and we're leaning into it.
Level set for the Yahoo Finance community. How big is the business that you run at Citi? I know have you been over there for 2 years?
Yeah, about 18 months.
18 months, okay.
$1 trillion in client balances. We've got clients all over the world, a private bank. We've got more mass affluent businesses in the US, Hong Kong, Singapore, and in the Middle East. We got a tremendous business and a law firm group in the US and in Europe predominantly. So about 13,000 employees and a business with massive growth potential because Citi's brand has real meaning to clients around the world. It represents what many people are looking for, which is a U.S. financial institution with truly global DNA. And when you think about what it takes to manage through all these curveballs that are out there in the global markets right now, Citi speaks to it. Our global network, our deep local expertise, and our ability to help people who they may be living in Hong Kong, but their family has kids going to school in Europe. They've got businesses they're thinking about buying in the Middle East or in Europe. We can help bring our global network to bear to enable them to achieve all that and more.
In your seat yesterday for us was Mark Rowan, Apollo CEO. Of course, Apollo is the parent company of Yahoo. He said something that surprised me. He said the U.S. brand has been damaged because of the trade war. You're a global company. Are investors concerned about putting money to work in the U.S.?
I honestly don't think so. I mean, I think that, we think about the quality of companies in the U.S., the depth of markets in the U.S., the legal framework in the U.S., the flexibility of the U.S. labor market. I mean, there is just a long, long list of reasons that investors remain excited about the U.S. I mean, on the increment, sure, you're seeing the tariff dialogue create a little pause, a little hesitation, but I think the U.S. story is going to continue to be a powerful leading story in global markets for many decades to come.
Are investors able to separate between the Citi story and the U.S. story?
Yeah, well, 100%. I mean, most places around the world, Citi has been there 100 years. We are seen as a U.S. bank, but again, the DNA it's not just global, it's local. So I was at a lunch in Shanghai, not so long ago. Clients were talking about U.S. companies and how geopolitics would affect U.S. companies. Someone asked about Citi, and before I could even answer the question, another client intervened and said, well, Citi's not really a U.S. bank, it's Citi. It's a global institution. And so that's how we're perceived. And of course, we play key roles here in terms of helping U.S. companies reach around the world, but we also offer people around the world the ability to understand the U.S., rely on the strength and stability of the U.S. underpinnings of Citi to have confidence.
Treasury Secretary Scott Bessent was here, gave a closely watched speech. I'm going to try to read. I know it's noisy in here, but I want to read what he said because it was very interesting. He said, quote, "We have uprooted government waste and harmful regulations. We have planted the seeds of private investment, and we have fertilized the ground with fresh tax legislation. Next, we harvest." Do you agree with that? And do you think the economy is at a point where it is fertile, for investors?
It is the right agenda. It's an agenda about reinforcing U.S. economic strength. It's an agenda, though, as you just went through it, there's a lot of moving parts on this agenda. So as is the case, you got to have a solid strategy, and then execution becomes paramount. And the execution on the deregulatory agenda, the execution on the tax bill over the next few months, these are going to be pivot points in terms of whether this can all come together. And I would also say, I think it's a consensus here at the meeting, that's a strong agenda. It's not necessarily a complete agenda. A lot of discussion at Milken around human capital in the U.S., what needs to happen to the educational system in the U.S. to really step up to this opportunity to bring jobs here, bring manufacturing jobs here, compete in a different level. But we're supportive of the direction overall of policy. But again, execution here is this is going to be a very complex set of policies to put in place in a synchronized way.
I watched another interview you did. I think it was early April, after maybe Liberation Day. You weren't alone, but you were cautious on stocks. Now we've seen the market come back, I think to the surprise of many. Are you looking for a new drop? And are you a believer in this rally?
We remain cautious in terms of where to deploy incremental risk assets. Our message has not been liquidate your portfolio and go to cash. Our message has been right now, there's great uncertainty. We've seen soft data, but not a lot of hard data yet. We're beginning to see earnings estimates be readjusted. We've seen as many downward revisions as we've seen in a long, long time. So this is, we would like to get a little more data under our belt, a little more visibility going forward before we're going to have conviction about putting, incremental risk assets, out there. And, that remains our view. We generally think the market's going to remain at a trading range here over the next few months until some of these things become more visible.
Yeah, I was talking to Mattel CEO this morning, and on Kreis, he just yanked his guidance. He said tariffs this year will cost his business $270 million. Is the market too optimistic right now?
I think as we see the market's swinging from optimism to pessimism, one day after another, because there is great uncertainty. This is an unprecedented number of trade discussions they have going on in parallel. Obviously, above all is the U.S.-China dynamic. No one has a crystal ball. I think the president has an approach, but again, the pace with which events are going to unfold is almost impossible to predict. And so I think we're going to see investors swinging back and forth here from fear to greed on a fairly regular basis, and we're going to need some of these agreements in place. We're going to need some traction on other aspects of the agenda before we're going to have true confidence and conviction.
Lastly, Andy, the president has said he wants to create a sovereign wealth fund. They are moving forward with that. How impactful will that be to the broader wealth management industry, and how does that impact Citi?
Well, I think steps like the ones the president said, which are designed to strengthen the U.S. economy and position the U.S. to compete around the world. Ultimately, that is very good for Citi. We are a U.S. bank, and that benefits us in a variety of ways. I don't think probably direct impact on the wealth business in the U.S., but there's the wealth business in the U.S. Over time, of course, is driven by the wealth creation that's happening in the U.S. and around the world. And again, despite uncertainty, despite fear, despite geopolitical shocks, the main drivers of wealth creation around the world are still moving forward. Markets are spreading around the world. There are levels of innovation happening in all corners of the world that we've never seen before. And talent, not just in the U.S. and in China, but in so many markets. There's incredibly deep markets of talented people. This is all going to produce tremendous wealth creation.